they meant to say going into the call, you got the 23% earnings growth, you get the 4% GDP growth, you have a Fed meeting, and that kicks off tomorrow. So let's bring Jack Ablin in, Cresset Wealth Advisors, on maybe what people should be thinking about. And, Jack, we'll start where Nicole kind of ended there with the technology stocks struggling, but the overall earnings growth numbers being strong, and even Caterpillar this morning was quite strong. So what are you telling people now, that there's new leadership in the market, or what do you think's next?
Well, I do think that there is one theme that's concern to tech investors, and that's the privacy issue and regulations. When you get to be these tech behemoths, the only real competitive risks they run is going to be the government and regulatory. And of course, Facebook, led us on to increase regulation, most notably in Europe, that's starting to impact that business. That impacted Facebook, impacted Twitter, certainly an issue for Alphabet. Not sure why Netflix came down in sympathy. But, companies like Apple and Amazon, while part of that mix, certainly don't really parlay your privacy into profits. So I'm not so sure that theme is going to really throw a wet blanket over those stocks. But for the other names, certainly, that's a concern.
Yeah, Netflix had a tough time, not just, the last few days, but in general, it's 20% or more off its highs. So if that's the case, is there another group, another sector maybe that picks up leadership from here? Because certainly the economic numbers, as we saw on Friday, when it comes to growth, are quite strong. What's next for the market in terms of if it's going to go higher, where the leadership comes from?
Sure. Great point. And the thing is, a lot of the reason why tech has attracted so many assets, so much capital in recent years is because of the uncertainty in the economy, because of the uncertainty in global growth. And now perhaps, a company like Caterpillar comes out and flaps their arms and says, you know what, we're actually going to raise guidance for the rest of the year. Maybe an all clear signal for those that have been hiding in these tech names, certainly expensive, to start filtering out into the cheaper, value-oriented industrials, basic materials, to say, you know what, maybe there is an all-clear signal here, and we can actually take some risks and stick our necks out.
Yeah, because a lot of that was on trade concerns, or the trade tensions that were kind of bubbling up. And, I mean, we really don't know what happened last week with the president and Europe about whether there's some sort of a deal being worked out. We know there's talk, and it certainly helped the market on the day it was announced. But, for a company like Caterpillar, you brought it up, that's a perfect example, is that in good economic times, which we're in, you'd expect Caterpillar to do well. It's almost kind of a way we judge the economy. So on one, and you see the stock's not up a ton today. Maybe there's some thinking that things have peaked here. I don't know, for Caterpillar. But you would look at Caterpillar's strong earnings and say, yeah, that makes sense. The economy's doing well. But at the same time, to raise guidance with all the trade tension we have, that probably came as a surprise, right? What did you make of that?
Yeah, I mean, to me, it was astounding if I can't think of too many companies besides Caterpillar, maybe Deere, that sit right at the epicenter of global trade. And to have them come out and actually raise guidance, I think, was phenomenal. Keep in mind, it takes a lot of courage to own companies like Caterpillar. It doesn't take a lot of courage to own companies like Netflix. And I think perhaps this could be a good indicator that maybe investors are finally coming out of their shell and actually, wanting to take some pro-cyclical economic risk. We'll have to see.
Yeah, Caterpillar's not up. I mean, and maybe it's just a down market. I mean, the technology names could be dragging everything down, but Caterpillar's not up much today, which I also think maybe is somewhat interesting. Would you expect it to be up to more, or is it just good news to be up at a down market type of day?
We'll have to see. A lot of it depends on, how investors are reacting to the strong growth in the quarter, the strong earnings growth. Certainly year to date, with earnings up, 20+% in the first quarter, 20+% up in the second quarter, and the S&P is only up 5.5%, suggests that investors believe that this isn't a trend line. This is maybe toward the top of a cycle.
Right.
And the same thing could be said for the economy, too. 4.1%. Can we really draw a trend line from here? Probably not, given that, for example, 1% of that 4.1% came from trade. Well, we know that trade's going to be, diminished some in the next couple of quarters.
Well, especially with the soybeans, which we talked about, I guess, last week. But so you don't think it's real quick before we let you go? You just don't think it's sustainable, the growth?
No, we're going to need to see productivity go up in order to maintain a growth rate that's more than, say, 2.5% on a sustainable basis.
All right, Jack, thanks. Good to see you as always, Jack Ablin.
Thank you, Connell.